All right, cool. So welcome everybody to the study session. This is the last study session of this round, and I'm basically gonna just review everything we've learned so far. So it's gonna be pretty dope. We're gonna get a lot of different perspective today. Starting with an actual trade idea, right? So inside the trade room, you guys have my market update from today, and I sent out 1, 2, 3, 4 trade ideas. These are all on the same side of the market, so I believe these should all be sell ideas, right? If we start with AUD USD, this is what I sent out here. So I basically found these setups on the 1 hour. This is a 2 hour candle just so I could like fit everything inside the screen. But I'm basically looking at two areas, right? I'm looking at a sell area up here and then another sell area up here. What this is here, this candle is going to be a 4 hour valid structure. And then this candle is a valid 1 hour structure. So this is the first trade idea because it's the closest one, right? We're kind of coming close to that area. And we're actually a little bit closer now since the time I sent this trade idea out. But I'm looking at a sell right around this area here, 64885. And I'm going to go to the chart in just a second and show you guys what I was looking at. So here's AUD, right? I'm looking at this area right here. The reason being, if I start on like a higher time frame, we've been pretty bearish, right? As far as like this current leg and market structure here, we can see lower lows, lower highs, lower lows, lower highs. So we've been following it. What I'm aware of here is that on a higher time frame, we're inside of a bullish daily range, right? So this 4 hour downtrend has been taking us down to this area. This area is a valid daily, right? So this is the institutional candle sitting inside of the, the discounted range we like to trade inside of. So we can see that we're already pretty much respecting that area, right? So this 4 hour downtrend was only to take us down here to this daily, right? So whether we're going to keep going down from here or this is the area where we're going to reverse, we'll have to see, right? But as far as the 4 hour structure, we're still going to follow these cells until we start to get like 4 hour break and close above, right? So this right here is the most recent structure point. So whenever we're able to get a candle to break and close above that level, then we're going to shift and say, okay, cool, like we're back in alignment with the higher time frame, and we should continue bullish. But as of now, right, we're still going to play these cells. So 4 hour, you can see the market structure a little bit better, right? Here's a high, here's a low, lower high, lower low. So the reason I'm focused here is because this is the most valid structure, the most recent valid structure. And here's a pretty nice 4 hour institutional candle, right? That last up candle before the buy. So after the sell-off here, we traded below these levels and started to basically accumulate, right? And form more liquidity, which is why I still think we could find a sell to target these lows down here, right? So since all these are pretty equal lows, where I know there's a lot of people in profit, so the market's going to want to take them out. So maybe we get one more down push into this area before we actually start to move out of here. And that's kind of the bias. So just to get a little bit more detail here, let's go 1 hour just to look at that range. If I go 15, I believe is there's an imbalance. That's why I kind of narrowed it down to that blue area. So let's just kind of remove some of this. Let's go down to a lower time frame. And as you can see, right, after that last up push, right, this was the reason we're looking at this area is because this is the manipulation area, right? So whenever the market started to push up here, it was to take out all these previous sellers, right? So it wiped all these people out the market. And this high that it created basically formed an equal high with some previous price action. This high, this high, this high. So we're looking at triple highs right now. So there's liquidity up there, which I do think we can possibly trade through this level, right? Which is why we have our next zone. But if we start to see our entry confirmation inside that area, then we'll go ahead and play it, right? So just a little bit more detail on why I narrowed it down to that blue zone. As you can see, after we made that up push, The reason this is manipulation is because after we took out those highs, we immediately shifted to the downside, right? We're seeing the imbalance that was left inside the market right there, meaning there was a one-sided market here. There was literally so many sells that came in here that there was not a lot of room for buyers to participate, which is why there's an imbalance here, right? There's no wick to either side. So that's when we start to tell inefficiencies and that kind of stuff. So if I go back to the 1 hour, and let's just go ahead and see the rest of this price action to see where we're at right now. See how we're a little bit closer to that area now than when I sent this trade idea out. So it should be coming into that zone, right? What I would do is I would set an alert right here, right at the entrance of that zone, and start to watch it whenever it does get there, right? So when it gets there, what are we going to be looking for, right? If this is a 1 hour that I'm looking at here, then the 15-minute is what's going to show us a trend that's going to take us up there, right? So on the 1 hour is going to look like just one straight up push to the upside. On the 15 is where we're going to see those higher highs, higher lows. Whenever we start to get into the zone where we're looking to play, right, we're going to wait for that last high to get swept and then that change of character, right? So let me remove this real quick. So whenever we come into that zone and we see some sort of manipulation, right, the reason we're trading inside the zone is because of a 1 hour manipulation. Now, when we go down to the 15, we're going to wait for that same thing on the smaller time frame. So we're going to wait for that last high to get ran, or maybe, maybe it does like equal highs right here, whatever. We're going to wait for some sort of liquidity to be swept as far as like that last up push. And then we're going to wait for the market to shift direction back down to the downside, right? So when we'll be able to tell is after this most recent low gets a break and close below. So that's what's going to tell us, okay, that was that last manipulation. Now all we're going to do is wait for the market to come back into our area, right, and start to play. Once it gets in there again, then we'll start to play those sells, right? So on a fractal basis, once we get that shift of character, which will happen like this, right? This will be the sweep of liquidity to the buy side. And then we're going to wait for that change of character, right? So once we get that last high taken out and then the market immediately moves to the downside, then that's when we'll look at this bearish range and we'll drop our fib from that high all the way down to the low it created. And we're going to wait, like we're not going to enter as soon as this happens, right? We still want to wait for a better price. So we're going to wait for the market to come back into that area, right around the 786, 886 area. That way we can take a trade idea that looks something like this, right? We'll wait for our confirmations, take a sell right there. And at that point, we should be able to play like either this wick, or for now, we'll just stay outside the area and use the previous wick over here, which will be there, right? So here, that number in the middle is telling us that the distance from the entry to the stop loss is 32 pips, right? Which is not bad for a currency pair. Could definitely do that. But depending on how this looks, if this looks like a pretty safe high, like if this is an obvious manipulation, then we can just narrow our stop loss down to that high, right? Which is why we like to wait for those smaller time frame confirmations, so that way we can narrow down our entry and our risk, right? So if we do get something like this, then we're cutting our risk in half down to about 15 pips, right? Just as an example. And then we'll be targeting those lows to the downside. So we're looking at least almost an 8-to-1, right? So now from here, what I want to get into is how you actually calculate that position, right? And we went over this yesterday, but basically, let's go off the fact that we're trading off of a $10,000 account, just because that's a nice even number. You want to trade the same risk every single time, right? So for this example, obviously we're always looking for at least a 3-to-1. As you can see here, this is almost 8-to-1 risk to reward. And usually what we want to do is risk 1% of our account, right? So if our account is $10,000, my bad, y'all, we got a fucking hurricane coming through. But if if I'm risking 1% of my account, this is every single time, right? This doesn't depend on the setup. This is your trading plan, right? So $10,000, 1% risk means you're going to be risking about $100 on the setup, right? So now you already know that. So depending on the setup is going to change, right? Your trading plan is going to stay the same. It's always going to be $10,000 account. You're always looking for a 3-to-1 risk reward minimum, and you're always risking 1%, right? So if you're risking 1%, then you'd be looking to make 3%, right? Which would be about $300. Right. So that's basically like the trading plan. These are the things that are not changing. Now, depending on what pair you're trading, depending on how many pips you're risking in that given trade, right? So as of now, we have to risk 30. But if we wait for that smaller time frame confirmation, then let's just say you're risking 15 pips, right? So your lot size is going to change because you're always going to risk those $100, right? So if it's more pips, then your lot size position is going to be a little bit smaller. That way, you're able to account for that amount of money that you want to risk. If you're able to get a tighter stop loss, then your lot size is going to be a little bit bigger, right? The reason we want to narrow down our risk is because you're going to get, number one, a better risk to reward, right? And then, for example, if I was risking 30 pips, then let's just say my lot size was a 0.1. But now that we're able to narrow it down to 15 pips, then maybe our lot size is going to give us like a 0.2, right? So now when our trade goes in profit, now we're making more money on the same move because our lot size is a little bit bigger. Now, you're not just going to pick a bigger lot size just because you feel confident, right? We don't know which trade ideas are going to hit, which ones are not. That's why we always stick to that same plan. So for this example, if we're risking $100 on a $10,000 account, right? Then in order for me to risk $100 on 15 pips, I'm gonna go ahead and calculate that, right? So we have our tools. Let me go to my position size calculator, which you guys should have inside of your trading desk. And I know this is review for a lot of y'all. I'm gonna get into actually like some trade management and some entry strategies and that kind of thing for you guys. But inside your trading desk, so GG. So right here, you're gonna have your position size calculator, right? You guys should have this on your phone. If you are trading on your phone, it's a good idea to have it on there. So just make a bookmark or whatever. But we're trading AUD USD. Our account size is $10,000. Our risk ratio is going to be 1%. And our stop loss, we're just going to say 15 pips, right? So remember, your account size is only going to change based off, obviously, you're going to be making money, right? So this is going to grow. But for this example, we're just going to use 10,000. What's not going to change is your risk. You're always going to keep it at that same risk. In order for this trading plan to work, guys, you have to keep the same risk. And I'm not talking about the same lot size because every single trade is different, right? So the risk stays the same. The reason we use this is so based off of how many pips we're risking, we're always going to risk those same $100, right? So with this trade idea, based on my account size, based off how many pips, based off how much I want to risk, right? I told it I want to risk $100, right? Because that's 1%. So it's giving me my lot size, which is 0.67, right? For this example, let's just say we're going to set a pending order, and we just want to go based off the area that we can see right now. So since our pips went up, right? Since we're risking more, right? We're giving a little bit more of a distance for us to be right. And then our lot size is going to go cut in half, right? Because the pips doubled, then your lot size cuts in half. You're still going to risk those same $100, but now you adjust your lot size so that way you're not over leveraged, right? So now based off of this, you can go into your MetaTrader, right? MT4, MT5. Let me see. I think I have my MT5 on here. See if it's not too slow so I can show you guys an example of how you set an order. I know most of you guys are trading on your phone. Well, let's see if we can get this to pull up here real quick. All right, bet. So Still a little bit new to the MetaTrader on the desktop, but let's pull up a chart here. Let me remember how to do that real quick. Window. New chart. AUD USD. Man, let me go templates. Right, and we're gonna go 1 hour. So the 1 hour candle that I'm looking at as far as our trade idea is gonna be this zone up here, right? So let me mark that up. Right, so I'm looking at body to body. Right, that'd be my entry area, right? That my alert's gonna be somewhere here. That way when it comes into the zone, then I'm paying attention. And our entry is gonna be somewhere in the middle of the zone, right? Wherever that imbalance was at. Right, so let's just say that's my entry, and then my stop loss is gonna go right above that wick, which would be here. Right, so in this case, we're looking at a 30 pip range from our entry to our stop loss, right? So from here, I can go ahead and put in a trade position. Let's see. Damn, I'm inside of this USD CHF right now. I'm up about 17 bucks. It's retracing just a little bit, but we're in profit. Let me see how I'm gonna insert a new order here. Chart. New order. AUD USD. Based off of what we calculated here, right? For this 30 pip stop loss, our lot size is going to be 0.33. That way we can risk $100 on this trade. So 0.33. It's actually going to be a pending order. Sell limit price is going to be 0.64943. 0.64943, and then our stop loss is going to be 65233. So 65233, right? So we're going to place that order. You always want to make sure, right? So you always want to make sure that your limit and your stop loss are basically lining up with the levels you set, right? So in this case, whenever market goes up into this area, and then starts to go in our favor, then we're going to be in profit, right? Let's look at what the target looks like. The target in this case is around a 117 pip move, right? So if I go, and I'm using my calculator on my phone to do 117 pips, 0.33 means I'm risking about $3.30 per lot. So that means I'd be risking 100 to make 386, which doesn't seem right. It should be closer to 800. So 1.117 times $3.30. 117. Oh no, I'm doing 117 times 0.117 times 3.3. It's giving me 386. I don't know what math I'm not doing correctly here, but if I'm risking 100 on a
that was 15 to 30.
Mhm.
It was supposed to be a 667.
667. I think so, yeah. But either way, like just looking at my risk reward, if I'm risking 100, I'm looking to make $783, right? Because it's a 7.8 to 1 risk reward. So for every 100 that I'm risking, I'm making 783, right? So that's basically like how you would calculate your position, right? Now let's say I'm able to lower my risk and do a 15 pip stop, then I'm going to drop a bigger lot size, right? and that means I'm still gonna make, I'm still gonna be risking the 100, but since my lot size cut in half, then I'm only making about 360 bucks, right? So that's how the lot size and the position and your account kind of all relate together. Now let's go into a little bit of an example on how to actually enter, you know, what to look for, how to kind of split your positions, that kind of thing. But before I do, does anybody have any questions on calculating the lot size? Everybody, does it make sense to everyone? Good. All right, cool. So actually, let me bring this back real quick. Right, so if I'm looking to do one order, then I just showed you guys how to calculate it, right? But let's kind of talk about here splitting entry positions. That way you can kind of split up your risk and not have to just stick to one entry. That way you can, you know, kind of play the zone a little bit better. And the way I would play that is like this, right? So this is going to be my area. And if I'm looking to risk $100, then I could basically take one position and risk my full $100 on that one position, right? Another thing I can do is I can split up my trade position into two different positions. So let's just say now I want to do two positions, right? Means each entry I'm gonna be risking $50 on. Right, so I'm just kind of splitting up my available leverage, right? So what I would do in this case is I would set a pending order at that price for half of my risk, right? So instead of going into my MetaTrader and risking the full 0.33, right, like I did here, if I want to split it up, then maybe I only risk 1.5 as far as my pending order, right? That way I'm only, like, let's just say it activates my pending order, and then now I'm not like necessarily looking at the chart or it happens overnight or something. So now I'm only splitting half my risk, right? So you're a little bit more conservative, and that allows you another position, right? So let's just say you get into the market, right? Let's just say instead of the 0.33, we drop like a 0.15, right? So now we're in the market. If it keeps going, then I'm risking 50 bucks, right? But let's just say, you know, let's just say this happens overnight and it comes in and it activates your entry, right? It already activated. So whenever you're setting a limit, you're not waiting for any sort of confirmations. You're literally just like trusting the zone and trading that area, right? So that's why I'm only risking half, right? So let's just say this happens overnight. You wake up in the morning and you're up, right? Let's just say you're up 50 bucks, right? A 1-to-1, right? Let's just say whatever you were risking, let's just say you're up, right? So that's still half of your position. You still have another half, another $50 to play with, right? So you already got into one position. That way, like the benefit of that would be, let's just say this market activates your trading order and then immediately just kind of tanks from there, and you didn't get a chance to really wait for a better entry, or you didn't get a chance to reduce your risk, and you got in the market, right? So the good thing about that is going to help you with the fear of missing out, right? There's 4 fears inside the market. It's the fear of missing out, the fear of losing money, the fear of leaving money on the table, and the fear of, there's one more. You guys are gonna have to watch Valentino because I don't remember the 4th one. But this one basically helps with the fear of missing out, right? Like let's just say, you know, you were waiting for that area, but you didn't set a limit, and you wake up and the market's already down here. You're gonna be like, bro, I could have been, you know, $700 in profit right now. Or because we only risked half, you could have been $380 in profit. You're gonna be sad, right? So for you to kind of eliminate that fear of missing out, that pending order is going to take you out of the equation, right? You already did your analysis, you're trusting the pending order, and you've done your back testing, you trusted enough to play that area, right? So that limit is going to put you into the market without you having to necessarily overthink it. I know that's a lot of our problems, is just knowing when to enter, or maybe waiting for the perfect order and it never comes, or maybe waiting for the perfect entry and then it just left. It didn't give you a chance to enter. So that limit order is going to help you just get in the market, right? That's the pros. The cons of it is that you're not able to really manage it, right? You're not able to really wait for the best possible entry. You're not able to pick, like the market's going to give us a lot of information once we start to get up in these areas. The reason you want to market execute is so that you can personally pick and choose your entry, right? So that's kind of like the downside of it. But picture this, right? If you drop one limit for half your risk, then you're basically getting rid of that fear of missing out and taking yourself out of the equations. So you're not like, damn, like I'm waiting for the perfect entry. I don't know when to enter. Just set the order, risk half of your leverage. So now you still have that other half to play with, right? You wake up in the morning, you're up $50 and you're like, okay, cool. At this point, right, as long as you're up 1-1, then you could be like, all right, cool. I'm gonna take these profits. I'm gonna get out the market. Now you can come back and you can wait and play that full risk again, right? Because you're out the market now. You already took your profits. Now that gives you the opportunity to play this area again with your full risk. Right now, the second position is going to be that full $100 because you already took this position off the table. You already took your profits. Or let's just say you're in profit and you're like, okay, cool. I still have $50 to play with. Whenever the market comes back into your trading area, you wait for those confirmations, and then you're going to be able to play that other half of your order, right? So you're going to be inside of a 0.5 based off your limit order, and then you're going to be inside another 0.5 based off that tighter entry. Now, let's just say you waited for that perfect entry. It's a very tight stop loss here. Like, let's just say you're doing like 10 pips on that stop loss. Because the pips are smaller, then you're still going to be risking $50, right? Because that's all you have to play with. But because the lot size is 3 times smaller, or sorry, because the stop loss is 3 times smaller, then this position is going to be 3 times bigger than your limit position. You're risking $50 on both. Remember that, right? But because here you're playing a 30 pip stop and here you're only playing a 10 pip stop, then that second entry is going to be a lot bigger, right? So picture now you're risking $100 total with your 2 positions, and this one's a smaller entry, right? So let's just say whenever the market comes back down to that area, you're up $50 on your original position, but now you're up 150 based off of this position because you were able to kind of narrow down your risk. So now you're up $150 total, right? At that point, what you can do is close out this position, right? Take out your $50 that you were up on this position and leave this position riding, right? You're gonna ride this all the way down to our target, right? Or you can leave both of them in and play the full move. You can leave this order in and maybe close out a little bit of this one since this was a lower entry. Let's just say you got a higher entry up here, and this one's a higher leverage, lower entry. So let's just say you want to scalp this one, and now you're riding your original 0.5 the full way, right? So that's kind of how I've been playing my entries, and it's been giving me a lot of success when it comes to that, right? It's allowing me, number one, help with that fear, right? The fear of missing out, the fear of leaving money on the table, those kinds of things, right? That's why I'm splitting my positions. And also it allows me to kind of manage my positions a little bit different, right? So you know that you can only set one TP and one stop loss per order. So if I was only in one order, then I can only set one TP, right? Let's just say my TP is down here. But now if I got 2 positions, then maybe I could set a TP a little bit more conservatively here. And maybe, I'll ride the other one all the way down here. Maybe on the other one, I don't set a TP. I'm just going to ride the wave all the way down there. So that's trade management, guys. Like we've been focusing a lot on getting to the point where you know where to take the trade idea. But that's obviously you want to be like an independent trader, right? You want to find your own trade ideas, that kind of stuff. But trade management is like the most crucial factor, right, inside the market. There's 3 variables inside the market whenever you're trading, right? One of them is going to be the quoted pair, and one of them is going to be one of them is going to be the traded pair, and one of them is going to be the quoted pair, right? The third variable inside the market is you, right? So let's just say there's 2 of us taking the same order, same lot size, same entry, same account size, everything, right? Those 2 people are going to manage that trade in a whole different way, right? So let's just say one trader, puts his limit order, he gets in the market, he doesn't think about it too much. You're in the market. And let's just say the second trader was waiting for that perfect entry and never got it. And the trade idea went inside and went in that direction. It was a winning trade, but the second trader, because he was a little too picky, never got in the market, right? Let's just say another scenario, two traders get in the market at the exact same time, same price, same lot size. Let's just say whenever this market starts to come into, it starts to come into profit, and let's just say we're both up $200, right? At that point, let's just say trader one closes out half his orders, right? Takes his profit, takes his money, and leaves a little bit of money on the table to ride the rest. But let's just say trader number two was greedy and wanted to ride both positions all the way down here because he wanted to make $1,000, right? He wanted to make the full max amount of money he can make. So he never took partials, and the market starts to come into profit and then immediately shifts the other direction. Even though both traders were in profit at some point, let's just say $200, trader one made $100, right? And then the market, reversed, and, he broke even or whatever the case might be. And then trader number two never took profit, never put his stop loss into break even, never took any risk off the table. So it was a winning trade, but his trade management, didn't reflect inside the trading account. So that's why trade management is so important. You gotta execute, right? You need at least, I would say, like 30 to 100 executions inside the market before you can really start to like notice what kind of trader you are, start to notice which fear out of the four is affecting you the most. Start to kind of say, okay, man, I'm going into profit a lot, but my trading account is still negative. Like, what am I doing wrong? Right? You go back test and you're able to see most of these trades are going in my direction. I'm just not taking partials, right? Or maybe, bro, I'm marking up all these trade ideas, but it's not reflecting in my account, right? I'm not growing my account, or I'm negative. Maybe you're a little bit too picky, right? Maybe the trade is giving you your entry and it's giving you, the desired direction, but because you were a little bit too picky, you're not getting inside of these trades, right? So marking up and finding the area, finding the correct place to enter is only half the battle, right? The other rest of that is the actual trader getting into the position. How do you leverage that position, right? Are you only getting into one trade? Are you splitting up your positions? Are you taking profits, right? Those are all a lot of different variables that are going to give you way different results, right? So I've been both of those traders, right? I've been the trader that is marking up these trade ideas. I'm sending them out. People are making money off of my trade ideas, but yet I'm not making money. So it's like, okay, cool. Like, what am I doing wrong, right? My technical analysis is on point. Everything on the chart is good. It's just the trader is the one that needs work, right? I've been the trader where my trade ideas were going in my desired direction, maybe not all the way, right? But as long as it's going in your direction and you get at least that 1-to-1, then that's a winning trade, right? From there, like if you didn't take profits at a 1-to-1, that's your fault. So I've been both. Literally all four fears inside of my 3 years of trading, I've experienced them, right? That's why the only thing I can't teach is experience. Like I can teach like, like I can give you trader A and trader B and what do they do right, what do they do wrong. I can send out the trade idea for you, but I can't make you set the order. I can't make you set the alert on TradingView. I can't make you leverage correctly. I can't make you, I can't tell you when to take profits. I can't tell you when to move your stop loss to break even. So all that stuff, bro, is on you. You know what I mean? We can spend all this time analyzing and looking at hypothetical trade ideas, but the trader that's actually in the market, actually taking those executions and not just taking them, but learning from them is the one that's going to see success, right? So rule number one is, you can't lose until you quit, right? It's about staying in the game long enough to see results. And then how long you have to stay in to see results is going to depend on how much you're back testing, how much you're adjusting, how much you're really analyzing yourself, right? And that's probably the main key, right? So that's basically a quick breakdown on just like what I look for as far as an entry, how to leverage correctly, how to trade manage, that kind of thing. I'm going to take this screenshot and use it for one of my lessons, and I'm going to send this out to you guys. Right? Remember that, right? We're doing the work here. We're on these study sessions. We're marking up these charts. All it takes is for you to click this button right here and go download image, right? Keep a copy of that, study, see what's working, see what's not, go back at the end of the week and back test, use those lessons to then provide value to others, right? And then your results or your benefits from the market are going to multiply if you're helping other people. That's just the way the universe works, bro. You can't get around the laws of the universe, right? So anything you share, you're gonna make it back at least 10 times, right? So do the work for yourself, first of all, right? So that you can go back and analyze your stuff. But when you're in that process of analyzing, click that picture button, save it, start a Telegram channel, post it on your Instagram, whatever. That's kind of the lesson inside the lesson. But this is scenario one, right? Now from here, let's give another example. And let's just say the market actually, continues to push through and goes in the other direction, right? So let's go 4 hour just so we can see it a little bit clear. Right, that blue area is my entry zone, and we're still going off the same parameters here, right? Like our trading plan doesn't change. The setup can change, right? This is one setup. This is a completely different setup. Even if it's on the same pair, market conditions, stop loss, everything is going to be way different, right? So let's just say market trades through here. And bro, I better go back and change the lot size on that pending order because I'm not trading a $100,000 account. So let's just say, right, the market continues to trade through this level, and then it gives you this entry, right? So let's just say, it came into our area, it offered a nice reaction. Whether you made anything off of that reaction or not is not relevant. But let's just say after that, the market kind of keeps trading through, right? This was a winning trade right here, right? So if you took your profits, then you made some money. If you went break even, then at least you didn't lose any money. But this was a winning trade, right? If you didn't take it, you can't make money, right? So a lot of different things can happen within just this right here, right? A lot of people made money just off of that reaction. Some people didn't enter, some people entered, but then they got stopped out. So, it's just different scenarios. So now let's just say we're watching the market and then it's coming into our zone, right? This is a 4 hour, but let's just say on the 15-minute inside of our zone here, it's building that liquidity that we like to see. We get that manipulation, right, to take out these people, right? Because it's fractal, just like it did over here. It took all these 4 hour people out the market. On the 15, whenever it starts to get into that zone, it's going to start doing the same thing. It's going to take those people out and then it's going to shift, right? That shift, right? Because if we're selling, we're not going to sell inside of a buying market, right? All this is just an uptrend still, right? Even this high right here, you don't know that it's a manipulation until this happens, right? Once we get that shift, then you wait for that ideal entry and then you play that zone, right? So based off of this scenario, let's just see how we would basically leverage this right here. Right, so for a position, let's just say this was my entry here. And if I were to play this position just based off of like the 1 hour wick up here, that's 72 pips. Me personally, I don't like to trade anything more than 30 pips on a currency pair. So on this scenario, I would need to wait for some sort of lower time frame confirmation, right? So let's just say we got that confirmation on the 15-minute here, right? We saw that liquidity manipulation shift, right, which is our 3 confirmation. So now we're able to lower our risk down to 20 pips. That's a lot better, right? We can definitely handle that. Now, 20 pip stop loss, and let's just say our take profit is that same area because we never got down here, right? We offered a nice reaction, but it never managed to get all the way to our actual target. So if we're able to get a higher entry and still ride down to that target, then the distance is larger. Right now we're making 175 pips here, risking only 10. So now that's closer to 10 to 1, right? So same trading plan, right? I'm still going to risk those same $100. Let's just focus on one entry for now. If I'm risking $100 on a 20 pip stop loss, right? You don't have to be good at math. You just have to have your tools, right? So AUD/USD, $10,000, 1%. None of that's changing. The only thing that's changing is how many pips you're risking. So if I calculate that, now it's giving me a 0.5, right? So I got my 0.5. I can then go ahead and market execute right at that area, right? Now, let's just say I want to play the 5-minute and I want to play 2 different entries, right? So now off of these $100 that I'm risking, right? This is not going to change. I'm always risking $100 every single setup, right? As you can see here, doesn't matter what lot size, what stop loss, nothing else matters. It's still going to be $100, right? So if I'm doing one position, then I'm dropping a 0.5. But now let's just say I want to play two positions, right? So now I'm going to drop a 0.25 and then wait for another entry, right? So now I'm risking $50 on each, right? Based off that lot size. And I'm leveraging my 1% risk inside of that trade idea. Right, fam? So that's two examples right there. I'm going to show a buy example, and then that's basically going to do it for me. I'm going to see if anybody has any questions. Let's go see if I have any buys actually marked up. All right, so I don't have it marked up, but I'm just going to basically play this right here. Let's just say for whatever reason, the market is in an area right now that I want to go ahead and execute inside of, right? So and this is just a hypothetical trade idea. Like this is not, I haven't done my analysis, but right here, I can see a sweep of liquidity, right? First of all, it's a bullish market, right? 4 hour, we can all agree that it's a bullish market, right? I see a sweep of liquidity right here, right? That took out all these previous lows and then immediately shifted direction, right? So because these lows were swept inside of a bullish market, we wait for that confirmation that we're still bullish. And then this becomes our area of interest, right? That becomes our institutional zone. So I'm looking at, as of now, this candle right here is what looks like the manipulation to me. I'm gonna go down to the 1 hour and see if I can narrow that area down. Right, and let's just say, you know, I wanna maybe narrow it down to this 1 hour candle right here, right? This was that last 1 hour candle right here. I'm talking about this one right there that gave us that sweep of liquidity, right? That one last bearish candle right here that gave us that last sweep of liquidity. So even this is a 1 hour, right? So we start on a 4 hour, but it's fractal, right? So even this right here is 1, 2, 3, 4, 5, 6, 7 hours of liquidity within these wicks right here. So this 1 hour candle that swept out all this liquidity, it might not look like much, but you got to keep in perspective what time frame you're on, right? So on a 5 minute, this is a whole, you know, accumulation that people were buying inside this market, right? So we see that 1 hour manipulation, and then we wait for the shift of character, right? That tells us, because this move was so strong, that tells us that the intention of this candle was just to take people out the market so that we can buy, right? So that's as simple as I can put it. And let's just say we're going to play that area, right? We're going to make sure that it's inside of a discount zone, right? So if I measure my fib from the low all the way up to the high, anything below the 50 is good. I only trade below the 618 and ideally 786, 886. So right now we can already see that we're about as discounted as we can get, right? So this is a very interesting area to play these buys, because once you're inside of these discount areas, the more discount you can get, right, you're going to get a tighter stop loss, right? So if I'm doing long position right here, right, my stop loss would go below this wick. 7 pip stop loss, that's nothing, bro. I'm going to give it at least 10, right? Because it's so small, I'm going to give it a little bit more. I'm just going to go 10 pips, and I'm going to play it like that. I haven't done my analysis, obviously, but just off of what I can see right here, my target would be here, right? There's a body gap inside of a valid 1 hour structure. So a setup like this is going to give you about almost a 13-to-1. So that's a very precise entry, right? So now all this right here is basically, you know, the price action that we're currently dealing with on the 1 hour. You know, it might not look like much. So what we're going to do is we're going to go down to a lower time frame and see what's going on there and see if we can find an entry inside that area, right? So let's go 15. Right, what do I start to see on the 15? All right, so this is one thing I am seeing. I am seeing this manipulation here, right? So last down candle. Now, let me zoom in because this is very important, right? This is what I look for when I say an entry strategy or confirmations and that kind of thing. So we could see this downtrend, right? Forming on this 15. On the 1 hour, it was just one push to the downside. On the 15, we can start to see that trend, right? Lower low, lower high, lower low. That's taken us all the way down to the area that we're looking to participate in, right? So now let me do this right here. Let me go a different color here. Let me go a little bit thicker so you guys can see, right? So this is our 15-minute downtrend. What I'm gonna wait for as far as like an entry confirmation is a break of structure to the upside, right? So this could be the manipulation, but we don't know yet, right? It's too early to tell, right? We're in a bearish market on this 15. So for all we know, this can just continue to sell off, right? We're not predicting a manipulation. We have to wait for that confirmation, right? So what would be my confirmation? Would be a break and close above this 15-minute structure here, right? We already did a lot of work with market structure, so I hope you guys are paying attention. I mean, I know it's some of you guys' first time, so we'll get more work as far as that goes. But as far as here, this would be my valid 15-minute structure, right? Structure meaning higher highs, higher lows. This is my most recent structure. So now that we're inside of my entry zone, right? What I want to wait for is for the market to actually break above this candle, right? Give me a 15-minute confirmation that we're ready to go back bullish, right? Because until we get that, we're still in a bearish structure, right? We can all agree. So once we get a 15-minute candle to come and close above this level, right? You see a 15-minute body close above this body right here. Right now, that's when I'm going to start to wait for my actual entry, right? So in this situation, we got our bullish change of character, right? Because our intention is to take it to the upside. So we're going to wait for that confirmation that the market's back bullish, right? So let's just say this would be my range from this low to this high that created this bullish range, right? What I'm going to do is measure my fib from low all the way up to that high. And I'm going to wait for, I know it's kind of getting a little bit pretty messy here with all these markups, but it's all important, right? So what I would wait for here, right? If I'm looking at this low, so whatever high gets created, I'm just predicting right now, right? My 786, 886 is over here, right? So where inside of that area, anything below the 618, I'm looking for an institutional candle, right? So on this 15, this is my institutional candle right here, right? That last down candle before the up push would be the manipulation candle. But remember, like even this little retest here is still too early to tell because we haven't got a break of structure to the upside yet. So we're not going to sell inside of a bearish market. Once we get this right here, then we're going to look for the retest of this institutional candle. And I'm gonna go back after this call and do a little bit more analysis, but I do think that's a valid trade idea, especially with how bullish the dollar has been. So if I can get something like that, maybe I don't get, my ideal entry, but I get something like this, right? Let's just say I'm able to get something over here, right around this area that actually gives me, right now I'm going to start to play this zone, right? So remember, from the 1 hour, we started on a 4 hour, just looking at the fact that we're in a bullish market, right? This was our area of interest because it was the last manipulation. So once we get down there, right, then we're going to start to narrow it down to, like, let's just say a 15, even a 5, and wait for the manipulation, the break of structure to the upside. And then once we get that retracement, then we're in it, right? So that's how you kind of narrow down your zone. Now, if all this was kind of confusing to you, that entry, even before we went down to kind of find the perfect entry, if you were to just play the limit with a 10 pip stop loss, bro, you're good to go, right? You don't even have to wait for any of this to happen. You can just play the zone, risk your 10 pips, right? Risk your $100 on that one position. Or let's just say, because we're inside that area, I'm just going to go ahead and enter right here, right now, right? And only risk half of my lot size. Let's just say I risk $50 right now, market execution, right? But then I wait for that shift of character, right? I wait for my ideal entry, and now I take that second entry. So now I'm 2 entries in, playing that area with a little bit of a split risk. Now I have 2 entries, different lot sizes. I can manage them differently. One of them allowed me to get into the market without me feeling like I'm missing out. And then the other one gave me that ideal entry that I'm looking for, right? Based off everything we've been studying. So that's really it, fam. That's all I got for you guys. I know I went pretty quick and didn't really stop, but it was a lot I wanted to get through. But if anybody has any questions, I can definitely stay on here for another few minutes and answer some questions. What do you guys got? This is the last study session, bro. So if there's anything that's going to help your trading right here, right now, then this is the time to do it, bro. Go ahead and ask your questions, whether it's in the chat, anything as far as market structure, calculating your lot size, entry positions. Hey, if you guys got any questions, go in. Does it make sense, más o menos? Do you feel like you'll be able to put some trades in? You understand, like, okay, this was looking at that area. I'm just gonna play it. You don't have to worry about like finding the ideal entry. As long as you can play the area, always risk that same lot size. Yeah, see, nomás, and we'll get more work on like, because I know this is probably, I would think you need a little bit more as far as what I'm looking at. Okay, but we'll get more work in. Okay, cool. And I'm gonna record this, guys. I'm gonna record this and put it on my YouTube so you guys can access it. Ramiro, I'm glad you have a question, guys. Just as a lesson inside the lesson here, Ramiro's already funded. Ramiro's already seeing results inside of his trading. And he's probably the only one I see asking questions on a consistent basis. Shout out to Andy as well. But Ramiro is constantly looking to improve, fam. Like, the best students are learning when everybody else thinks there's no learning to be done. So his question is, I have trouble calculating or seeing how much I will be making on the trade. Like, how do you see how much I can make if the TP hits, etc. So based off of your lot size, bro. So based off of when you're calculating, you're always calculating off how much you're willing to risk, right? How much you're making is secondary. This is something I've said before, and this is like a lesson in life, like not just the markets, right? Whenever you get into an opportunity, you don't know what you're going to get out of it, right? You have an idea of what you're going to get out of you taking a risk and taking part of this opportunity, right? Like, let's just say, for example, learning how to trade, right? I don't know what I'm going to get out of this. Like, I have an idea. Okay, cool. I could possibly make some money. I could possibly quit my job, possibly buy that Lambo. You know, I have an idea of what direction, you know, I could possibly go because I'm taking this risk. But what you know right off the bat is what you're willing to give up, right? So in order for me to participate inside this opportunity of learning how to trade, I'm going to be giving up some time, number one. I'm going to be giving up a lot of like mental capacity, right? I'm going to be giving up a lot of executions, a lot of, you know, hopping on go live, studying myself. That's what I'm giving up, right? I'm getting into a risk reward. What's my risk? Time. What's my reward? Time. You know what I mean? So in any sense, you only know what you're willing to give up. You don't know what the overall outcome is going to be. Now, you can have an idea and you can calculate, right? So using that same kind of perspective, whenever you're getting into a trade idea, you don't exactly know how much you're going to make, but you always know how much you're going to risk, right? And this opportunity here, I know that I'm risking, let's just say it's a 0.1, right? If I'm risking a 0.1 on 15 pips, then I'm risking $15, right? If I'm risking a full lot size, then I'm risking 150. I know that for sure, right? Now, based off of different factors, right? Like, let's just say this trade idea goes into profit. Let's just say you take off your, you know, some position here and let the rest ride. Let's just say you hold your full position all the way up here. How much you're going to make is depending solely on your trade management and how much of that actual money you're actually able to lock in, right? Because I could place that trade idea for you that goes in profit and then just be like, okay, cool, here, bro, now you manage it, right? Is going to be a different story, right? So you don't know how much you're going to make, but you can have a good idea, right? Based off of this risk reward and based off of knowing how many pips I'll possibly make. So if you get into this one trade idea on the 0.1 and you hold it all the way up to 132 pips, you didn't take any profit, you didn't do anything else, you're going to make $132 on a 0.1, right? Because I know the amount of pips times my lot size, right? So just like I know how much I'm risking based off of lot size times pips, I know how much I'm making, right? So if I'm making 132 pips on a 0.1, I'm making $132. If I was risking a lot size on the same move, I'm making $1,300, right? So that's why the least amount of pips you can risk is going to give you a bigger lot size, right? Which is in turn going to give you more profit. That makes sense. You're always risking the same. You're always risking, let's just say $100, but based off the lot size, you're able to make more or less, right? Like if you're risking 50 pips, let's just say you're making $150, but let's just say now you're only risking 10 pips. Now you're able to make $500, right? On the same play. It's about your trade management, right? So I hope that makes sense, bro. In the same situation, like let's just say your trade idea goes into profit, and let's just say you're up 100 pips, right? Let's just say you're up 100 pips in profit, and you could possibly hold it, but you're good. Like, okay, you're at a 3-to-1, you're happy with the profits, you're gonna take these 100 pips. So because you dropped the 0.1 on those 100 pips, you're gonna make $100, right? Let's just say you only were able to lock in 50 pips. You drop the 0.1, you're making $50, right? So does that make sense? I want to make sure that that's pretty clear. Just needed more clarity. I mean, I already know, but I just needed to be told, yeah, bro, for sure. Sometimes, bro, sometimes we all think we know the answer until we hear it in a different way or until we mess around and find out. But I hope that clears that up a little bit. Anybody, for sure. Anybody else have any other questions? I'll be happy to sit here and answer them. I ain't got nothing else to do. That's something I forget. Yeah, bro. Definitely a lot of practice, just hopping into the study session. So maybe you had a question that either you didn't know you had, or maybe somebody else asked the question for you. You know what I mean? So that's why these study sessions are important. That's why the trade room is there. After we get off this call, I'm also going to mark this up, and I'm also going to use this as a lesson for how to enter. That way you guys can have that as well. I'm going to drop this recording inside the YouTube so you guys can access it if you want to. But that's going to do it for me, fam. It's been a successful round of trading sessions, I feel like. From here, fam, I mean, you guys are on this call, so it tells me, you're willing to invest your time into it. Don't just invest time, but practice doesn't make perfect. We know that, right? Perfect practice makes perfect. And we're never going to be perfect, but it's about adjusting so that you're able to get as perfect as you can get. And then, keep executing, keep learning, so that way you're able to learn, right? From here, guys, it's up to you guys to execute and ask questions. And that's the best advice I can give you is just use what we've learned, put in executions. Maybe you're at a point where you're not really at the point where you can grow an account, but you're taking 5-10 executions every single day with the intention of learning something, right? Let's just say you take 50 executions and then you find out, like I wasn't calculating my lot size correctly, right? Let me go ahead and ask that question. Or let's just say you took 3 executions and you lost all of them. You can go ahead and be like, okay, what am I doing wrong? You already have all the theory. You already have everything you need to find, good trade ideas. We're in the best trading community. You're going to have trade ideas sent to your phone every single day, right? From there is like, okay, now it's your job to mark them up. It's your job to set the limits, your job to execute, trade manage, ask questions. So, you guys know I'm here for you, right? Just because it's the end of the study session doesn't mean that's the end of, whatever we got going on here. It's just the start. But I'll be seeing you guys soon, right? We'll be doing some chart markups. We'll be, watching some go lives. We'll be pulling up in person. But I appreciate every single one of you. Thank you for you guys' time. And let's get it popping.